Hey, what's going on, guys? So I know there's been a lot of, inflation lately. I know a lot of people are worried about, the high food prices, high gas prices, high real estate prices. But, there's this whole inflation narrative and then the risk we might go into a hyperinflation. And I actually don't think that's true. I actually think we're going to do the exact opposite, go through a deflationary period. Part of it's going to be due to a bad economy. I think a lot of jobs are going to get cut, especially white-collar jobs, things like that. And it's going to put a lot of pressure on the entire job market because those white-collar workers will have to find other work in other places. And it's going to push pressure back down. So the labor market, there won't be so much of a shortage anymore. So that's going to push down on the wage pressure. But the main reason is because of the supply that we front run. So during the virus, the supply chains got very mixed up. Ships are basically imbalanced right now to where it's not a normal cycle anymore. They're kind of all over the place, and that created all these delays in people getting raw product, inventory, commodities, stuff like that imported from other countries. And now we're at a stage where people have so much supply, they have so much of everything, they have so much real estate, so much assets, so much, raw inventory, product, all that it's actually going to create a reversal now because they're already sniffing out the economy is weakening. We're hearing it in some of the retail numbers, things like that. Sales aren't as strong as anticipated. People have already spent a lot of their savings, during the whole pandemic thing. The average savings account was at its highest it's ever been, so people had a lot of money to spend. People were front running things due to anticipated inflation or maybe even hyperinflation, so they loaded up on everything, and that created a lot of inflation. And now they have so much supply that they have to dump the supply and find buyers to buy it. So now naturally the prices are actually going to go down. There's lots of deflationary pressures. Not only that, the dollar index is telling you the exact opposite story. The dollar has strengthened a lot in the last month or two, especially versus the yen, the won, the peso. It's strengthening versus a lot of other currencies, which makes our purchasing power, because we can buy more of their currency with our currency, makes our purchasing power so much more powerful now to where we can buy goods 15 to 20% lower than we could have a year ago. So people are going to order a lot of product right now and get their product in the next 90 days or so. And by the time they get that inventory, because it has to be manufactured and all that in other countries and shipped to the US, so it'll be like a 90-day period. These are cycles. And by the time they get that inventory, they're going to naturally want to drop the prices. Other smaller players can be more competitive, and the bigger players will have no choice but to lower their prices on a lot of their goods. So I think that's the biggest driver. Like I said, the currencies, our currency is so strong right now. The bond market has never said there's going to be inflation. Like, bonds wouldn't be at, a 10-year note wouldn't be at 3% with 7% inflation if they didn't see that reversing. The bond market's telling us something the exact opposite pretty much. They're telling you there's going to be, very, very, basically just deflation. And, there's a lot of different pressures, robotics, things like that, AI, that's going to be deflationary. Blockchain technology is going to be very deflationary. A lot of these types of things are actually going to, take away a lot of the middleman. And I think it's going to, lead to lower wage costs, things like that. I do think that the war in Ukraine will be settled, which will also be deflationary. I do think that there's a risk that we remove the tariffs to China, which will also be very deflationary. Just a lot of different forces that I see that are the exact opposite of inflation. I actually think that oil, right now oil is trading at $110 a barrel. I think the price of oil is actually going to drop back down to like $30 a barrel over the next couple of months. I do see the price of oil dropping quite a bit from here. There's a lot of technical things, but I also know Price of oil is high. It's not that we're really slowing down on pumping and all that. It's actually just the fact that OPEC is in a alignment to hold supply and store oil. You can see it everywhere in a lot of the storage costs. A lot of these facilities that store crude oil are, charging way more than they were before. So there's that. Not only that, another big red flag to the economy is JP Morgan's. Their credit default swap rates are 4 times higher than they were during the pandemic, when everyone thought they would really lose their business and everything. They're basically saying because basically a credit default swap is insurance against bankruptcy. You purchase a small insurance policy from a bank, and they'll protect you if you do in case go bankrupt. That's kind of what it is, and the cost of that insurance is 4 times higher than it was 2 years ago. So that's another pressure. It's also a cycle that we're going through. I think since 2009 up until now, we've been in a consumption cycle where we consume more than we produce, and now that has to flip. Just based on, how much debt we're in, all that, it's going to have to flip to where we become a producing economy once again, because there's cycles, a consumption cycle, then a production cycle, then it will go consumption cycle, production cycle. We go through these cycles, and now we're going to have to go through a production cycle where people are producing more than they're consuming. And all of that, when you're busy working and producing, you're not as likely to consume as much either. So it's like a double-edged sword type thing. And, I just think that's where we're heading into. And I think over the next 10 years, the U.S. will once again be a big manufacturer. I do think that there's, bright side to getting out of all of this, but I do think it's definitely going to be rocky, over a while. Personally, about me, I work at a moving company. I move a lot of high-end rich people for the most part, and very upper middle class out in South Orange County area in California. And a lot of these guys, they are selling their big mansions, putting like half their stuff into storage because we have a storage facility, and just renting little small beach houses. And all of them have pretty much said that they're all waiting for a crash in the market, in the real estate market, to rebuy once again. So you're seeing big moves there. Stock market's already been going down for 2 months. Another big thing to watch is the copper index. Copper is one of the leading indicators of anything. It's probably the most used metal on earth. And copper's already down 20% from the high in the last 2 months. So copper's telling you an opposite story. Copper was rallying, and so was gold and silver before the inflation really kicked in. And now lately, for the last couple months, they've all been falling. And so that should tell you a lot. The gold market is very, very sophisticated. I've always been, from everything I've researched and learned from a lot of the guys that have been doing it for a long time, trading stocks and all that, they will tell you that the gold market is very, very sophisticated, much more than the stock market even. Doesn't mean I think stock prices are going to just plummet from here. I do think that they're actually probably going to bounce. And today is June 21st, 2022, to keep this in context. We might bounce up some more, and just trade in a big range, for a while, sideways for a while. That's kind of what I'm thinking might happen. Not positive. But yeah, definitely watching the price of copper. I definitely think the price of oil is going to drop significantly from here. Something you can do to participate in that, you can buy puts in USO, you can short USO, but always have a limit for yourself on what you're willing to lose, all that. That's why puts are a good idea, basically just downside bets, to where limited amount of money you could lose, things like that. But that's what I'm doing, and yeah, I just think, because there's a lot of technical things in oil. I could get more into that if people are like really, really interested. I doubt this video will get a lot of views or anything anyway. But, used car prices are already down. Lots of different commodity prices have already been rolling over or starting to roll over. And yeah, so you're seeing it. And yeah, I was always on board with the inflation because I noticed, with the tariffs and everything, people front running tariffs, people front running, buying extra inventory to front run the supply chain. Not only that, to front run inflation. So I did anticipate some inflation, but and that's the thing, because people could argue if the economy were to drop, we're actually just going to continue printing more money, which will create more inflation. And in a way, yes, but also in a way, no, because if the money is not being circled around, if the Fed's printing more money and people are spending less money, it's still not inflationary. It's actually deflationary. People spending money is inflationary. And, people have really high credit card debt right now. There's just so many different signs in the market that I think that we're actually going to go into a deflationary period. The best thing I think you could do is short the oil market. I wouldn't be crazy shorting futures and all that unless if you have that type of bankroll to do that, and you have a stop limit and all that. But I would buy puts in USO. It's basically an ETF that tracks the price of oil. And yeah, so let me know if you have any questions. I feel like I'm missing something. I might add in something else into the video because I wanted to talk about, there was more topics I wanted to talk about, but just kind of ramble a little bit, see how this video does. If it does well, I'll get more elaborate on it. If you guys have any questions, let me know. I could talk about a little more of the technical side of oil. I'm not going to tell you guys too much on the things that I think about, but you never know. All right, guys. Appreciate you guys watching, especially if you did this far. Love you guys, and peace out, guys.